Morning in progress. Hello and good morning, listeners. This is Almus Market Mornings with Jayaram Krishnamurthy, and it's time we have the final update for the week before we close saying TGIF. Folks, Asian markets look to open with a mixed set of updates. US retail sales growth remained positive but short of expectations. Similar was the jobless claims, which came higher than expected, with both the updates leading market participants towards reassessment of their Fed rate cut expectations or the hike expectations. Likewise, a good set of market participants are now expecting hike by the Japanese central bank, whereas the Chinese GDP grew by 5.4% in Q4. RBI announces new measures to boost cross-border transactions, but also is looking to inject liquidity. JK, too many updates to watch. So, what's your view on these things?
Good morning, Shikhar. Uh, so US data, I think, was overall very good because the retail sales, although the headline number was lower than expected at 0.4%, the control group, which refers to a subset of categories which remove volatile products, actually went up by 0.7%. And the control group items is the one which goes to calculation of GDP number. And of course, jobless claims were a bit higher. But what impressed me the most was a big rise in one of the regional manufacturing indices, the manufacturing activity in Philadelphia region, where the number came at 44.3, its highest since April 21. And just a month back, it was at minus 10.9. And this was the largest increase since June 2020, and when the factories began opening after the initial wave of COVID. And what was impressive was also the new orders index rose by 42.9, rather 242.9, highest since November 21. Shipment index claimed 41, its highest since October 20. Employment levels also rose. Prices paid were also high. Overall, it was a very good number from a manufacturing side, because the US manufacturing sector has been struggling for a lot of time, almost 3 years now, after the Fed began raising in rates in 2022. And the rise in borrowing costs, of course, had dampened the industrial activity. So this is a very good news from US point of view. And then, of course, as you mentioned, the Chinese data today morning, they were all very impressive. Retail sales 3.7 versus 3.5, industrial output 6.2 versus 5.4 expected. And then, of course, the GDP at 5.4% quarter on quarter, and year on year it is at 5%. And they have definitely been very impressive. Perhaps some of the measures that China has been taking for the last 6 months is having some lagged effect. But markets have not reacted much to this impressive data, because all focus is on the next week's Trump administration assuming office and what kind of policies or tariffs that it will be imposed on China. The market remains cautious. Now, moving away from economic data, we had two important events, not really a data. Like the Fed Governor Waller, who is known hawkish, has actually said that the rates can fall more than what is being discounted now. In fact, he is saying that there can be as many as 3 or 4 cuts in 2025. He even talked about a cut in March, and that really has come from his view that inflation will be getting closer to 2% a little quicker than maybe others are thinking. So that actually led to market getting a good sentiment on the bond market. And then we also had Senate hearing on the new Treasury Secretary, Mr. Bessent, being nominated by Mr. Trump. And most of his views were nothing very different from what we have known. He said the dollar should remain the world reserve currency, and the Fed should remain independent. He is ready to impose tougher sanctions on Russia's oil sector. And of course, he is a lot of emphasis on cutting government spending, or rather he said the government has a lot of revenue, but the spending is the problem. So that is where the market will also be focusing, and what measures they would take to cut down the deficit, which is at 6.5%. And there were no questions about the high debt and the plans that Treasury has to address them. So that was the key question that the market was expecting, but that was missing. Now, on the market, dollar is actually been kind of sidelined, moving in a very narrow range against major currencies. But exception was the Japanese yen, which actually tested even below 155. The odds of a BOJ rate hike as a reason further overnight after reports that Bank of Japan sees a good chance of Jan hike, barring a major market rout following Trump's inauguration. So the probability now reached at 79%. And the dollar yen actually made steady gains, rather yen made steady gains through the yesterday's session. So now stands somewhere closer to 155. But I would still be very cautious about assuming the Bank of Japan's rate hike decision, because they have always tended to disappoint the market, or rather take the market by surprise either side. So I think market would also be cautious about taking things too far. On the other currencies, I think Chinese yuan has marginally shifted to the higher side against the US dollar after the data, but still cautious ahead of Trump's administration taking over. The euro and GBP have been on the sideline. GDP data from UK was slightly better than the last month, coming at 0.1% versus negative previous month. Europe, of course, confirmed the German inflation, which was slightly higher, and the final number also confirmed that. So overall, currency markets are kind of in a holding pattern until the Trump administration taking over, and what we hear from the new government about their policies, to what extent they pursue the tariff policies immediately, etc. Meantime, we are also hearing that Canada is prepared itself to with the retaliatory tariffs up to 105 billion. So it's not as though it's going to be a smooth ride even for the Trump government if they impose some tariffs wholesale as soon as they take over. Now, coming to rupee, yes, as we mentioned, the support in the 86, 20, 30 region was very good and attracted a lot of buying from importers. We also had continued to see the FI outflows. Yesterday was also in excess of 4,000 crores. Now for the new year, or rather January, we have seen more than 5.5 billion of outflows. So the trend has continued, and the rupee, of course, saw almost the previous high at 86.64, now trading near 86.50. I don't see much movement happening in rupee now because it near the all-time highs. At the same time, there won't be any major selling as well, which is coming because of events ahead next week. So yeah, definitely the dollar does look ripe for some more correction, but it will only happen if there is much watered down policy announcements from the Trump government. And amid all this, what is notable is gold steadily gaining towards 2007-20, not very far from its all-time high. Yes, I think this is a notable feature. Gold has been moving in tandem with gold, in tandem with dollar rather. So dollar gains and gold gains have been going to both are acting as a safe haven, and this is also surprising despite the fact that the real long-term real yields in the US have been higher. Normally, when the real yields are higher, gold tends to go down. This really is indicative of the very strong interest that the central banks are having in accumulating more gold. So that trend is very much intact, and I think if nothing there is no reversal without profit taking, etc., we might even see a level of 2780 being retested. So maybe a quiet day today, but and Monday being a holiday for US markets, I think Tuesday onwards we'll see a lot of action. Thank you.
Interesting. That's it for today, folks, from Jayaram Krishnamurthy. But to summarize, folks, gold has had a consistent move on the higher side, and the strong interest, as JK mentioned, by the central banks continues to put the targets on the higher side for a lot of market participants. But overall, it seems that the currency markets are holding on to check for the inaugural policies and the Trump and tariff policies, which can be either watered down or aggressive, which will eventually decide the directions for a lot of currencies as well as the financial markets. With respect to directions, we were also having the statements from the Fed Governor Waller on the rates path, which possibly was changing some sort of sentiments, along with the Treasury Secretary mentioning a few bits on the sanctions and the government spending. What was impressive was the set of updates from the China, but even that didn't have much of the reaction from the market participants. And talking about impressive updates, it was also the regional manufacturing activities from the US, which showed significant rise in orders, employment, and other bits, which was really good from what it was seen in the previous few months. On the domestic front, the outflows continued for the Indian market with $4.5 billion worth of outflows just in the month of January, and the rupee depreciating or continuing to depreciate with supports at around 86.20 or 30. We shall come back again on Monday with another round of updates. That's it for today, folks. Thank God it's Friday. That's how we close.